Hey guys, what is going on? Welcome into the video. So in this one, we're going to be going over what to expect from the broad market next and be going over 5 different scenarios that could be playing out over the next few weeks. And then we'll be going over individual stock setups and trade ideas for the week and weeks ahead. Let's get into it. So starting out, I saw this visual on Twitter and thought that this was great. This compares the current S&P 500 chart to historical crashes and just really maps out that nobody knows what's going to happen next. Bears are going to show you the charts on the right and say that we're only at the beginning of the massive crash, and bulls are going to show you the charts on the left and say that we've bottomed already and are going to the moon next. Now, my personal opinion is that we have most likely bottomed and are starting the first pullback phase of this reversal back to the upside, but need to be prepared for any possible scenario to play out next. And last week we talked about the S&P being way overbought and coming up on a strong resistance at 430 in the 200-day moving average, where we were expecting a pullback to play out next, and that is exactly what we got this past week, as so far the S&P rejected right off the 200-day moving average on Tuesday. So what I'm looking at next is the previous consolidation and breakout range, what we saw in late July and early August, which was between 406.7 and the 417.5 price level. So going over the different scenarios that we should be watching to play out next, the first one is that this pullback is short-lived. The SPY pulls back another percent or so, bounces off the 417.5 previous breakout level, which acts as a new higher low before setting the market on another leg higher. So the second scenario is that this pulls back a little deeper into the range and bounces between 406.7 and 410-ish, which results in a higher low, and then sends it back towards the 200-day moving average for a possible leg higher after that. And the third scenario that I'm watching is a deeper pullback into the 406.7 to 410 range, a small bounce that gets rejected near that 417.5 key level, which then results in a lower high before breaking down further and finally ending this pullback at the 50-day moving average and moving back up from there. In the final scenario, that would be the bearish one, where just like the third scenario, the market pulls all the way down to the 50-day moving average, but instead of bouncing there, it fails to hold and it breaks back below. So the 50-day average, in my opinion, should be looked at like a line in the sand. In the chance that it does get broken and holds below, I would expect the market to either retest the previous lows and potentially double bottom off those previous lows, or to break down to new lows and send us down towards 350 on the SPY. So obviously nothing is going to play out exactly like I described or mapped out with those scenarios, but those scenarios are just a good baseline model to kind of look at, kind of see how price could react at those specific key price levels and what would happen if they did break or hold, etc. So in my personal opinion, those first two scenarios would be the most likely scenarios to play out. A little bit of a deeper pullback, a couple more percent or so, before bouncing there, making a higher low, and then continuing this new potential uptrend. And the reason that I personally think that we have bottomed out in the market already is because there has been a character change in the market. We are now seeing breakouts hold, and we are now seeing some leadership actually be established. We're seeing some leading stocks breaking out, making new highs, and holding those highs, which we did not see during those previous rallies. We would see pops up and then they get sold off, and no move to the upside would sustain. And we did not see any growth stocks at new 52-week highs, though now we are, and we are seeing those new highs hold, which is a major character change for the market, and why I think there is a good chance that a new uptrend is potentially being established. It's going to be a rocky road back up for sure, and it's not going to be easy. It's going to be a lot of chop in my opinion, but I personally do think that we are headed back up. Could I be wrong? Of course, but keep in mind there are still some major macroeconomic risks to be aware of, and we are far from being out of the woods yet. So obviously stay on your toes, be ready for any scenario to play out, and have a plan for each scenario and what could be happening next. So we'll see what plays out next fundamentally in the markets, and technically those are all just my personal thoughts and opinions. And one more thing to keep in mind that's very important, this historical chart map lays it out very well. Last week, everyone was showing you those bullish charts and saying we bottomed last week and ultra bullish on the market. And now you're going to hear everybody bearish on the market once again during this pullback and saying that we're headed to new lows. The best thing you can do is to ignore the noise, look at the broad picture, and follow the market's trend. This pullback has been needed and could set the market up very nicely for a leg higher if it's able to make a higher low next. But of course, be prepared for any scenario to play out. Follow the trend, don't look at the noise, and just trade and manage your risk how it's best for you. Alright, so next up, let's take a quick look at Bitcoin. So as we talked about on the channel 2 weeks ago, Bitcoin was setting up in this bear flag pattern and was likely going to result in a breakdown, and the breakdown has now started on Friday. Now what happens next is most important. Bitcoin is either going to establish a higher low next, potentially around the 20K psychological level, which would be bullish and likely mean that it has bottomed already, or it's going to break below previous lows at around 17.6K, which would likely send it down to around $12,000 per coin before bottoming around there. Bitcoin is very important to pay attention to whether you're in crypto or not. As we've seen many times, Bitcoin has acted as a leading indicator for stocks and risk-on movements. If Bitcoin does make new lows, it could also mean more pain is ahead for stocks, so that is very important to pay attention to. Alright, so now let's take a look at some stock setups and trade ideas for the week and weeks ahead. And starting out, there's 3 sector charts that I want to take a look at. So first is the solar sector, which is currently the #1 leading indicator. It broke out of this long-term falling wedge pattern and is in the midst of what looks to be a healthy pullback. If the broad market pulls back deeper, watch for this to pull back as well to potentially retest the trend line or the 77.5 breakout level as new key support. And once this makes a higher low, there are a lot of individual solar sector setups that have potential to explode higher, such as Enphase, Solar Edge, and more. We talked about a lot of these in last week's video. And a further pullback is likely here, but this has potential to explode higher afterwards, so keep this sector on close watch moving forward. Next up is the biotech sector. This has been a leading sector after bottoming off long-term support as well. I'm watching this to see if it's able to make a higher low off the $85 previous breakout level, and once it's able to confirm back above the 200-day moving average and break above that 95 level next, this is another potential explosive move in the making. As we saw that last run after making those COVID lows in the 2020 bull market, this thing exploded. And to trade this one, I personally like to trade the ticker symbol LABU, which is a 3x leveraged biotech ETF. There's quite a few strong individual setups in this sector, though with individual biotechs, they are higher risk due to FDA approvals, drug trial failures, and more, which is why it's personally preferable for me to trade the ETFs instead of the individual names, other than quick trades where you know no catalyst is coming up. And finally, there's a semiconductor sector. This is tracked with the ticker symbol SMH. This is another one that's shown a lot of strength after bottoming as well. So the sector is currently forming an inverse head and shoulder pattern. It has potential to explode higher once it breaks above the 247 level of resistance. A lot of investors have a favorite stock in this sector to trade, though there's also SOXL, which is the 3x leverage ETFs for semis as another trade idea when and if the sector is able to break out. If we see deeper pullback, this could set up for a deeper right shoulder before exploding higher, making another leg higher during this recovery if the market does continue this newfound uptrend that we have had. Alright, so now getting into a couple trade ideas for individual stocks in this coming week. First up, DLocal, ticker symbol DLO, is one that I'm watching this week. So this is a trade idea that I'm watching as a post-earnings trade. If they beat on earnings, this stock could potentially set up for a huge move to the upside. So the earnings report come out on Monday the 22nd after hours, and they have the earnings call the morning after on Tuesday. So the stock is set up in an 8-month long consolidation and inverse head and shoulder pattern, also showing nice accumulation over the past few months, which means that it's had higher volume on green days and lower volume on red days. This indicates that institutions are buying and holding this stock, while the sellers just kind of wash out some smaller hands. The big money is buying. The stock also has a history of 2 consecutive earnings beats and large moves afterwards. In March, they beat on earnings and made a 60% moves in the 4 days after, and in May, they beat on earnings as well and made a 60% move in the 7 days after. And to be clear, I would only be looking to trade this if they beat and the stock makes a move to the upside on volume. For example, last week I talked about LI as a stock that I was looking to enter if they beat on earnings and the stock gapped up, though they ended up missing on earnings, so it was a no trade for me. The stock initially bounced after falling in the pre-market, but because the earnings numbers were a miss, the stock ended up selling off the rest of the week. So what we want to see for DLO to enter the trade is a beat on numbers and gap up on heavy volume. The target levels that I'm watching if it does make the move is the 35 to 38, which is a strong zone, but if it's able to break above that, $40 is up next, which can then give it upside to fill the gap above to $45 per share as a higher upside target. That would also fall along line with those 60% previous earnings moves. Just because that happened before, it does not mean it's going to happen now, but there is potential there. So this is at the top of my watch list this coming week because of that reason. So next, let's take a look at Occidental Petroleum, ticker symbol OXY. So on Friday, news came out that Warren Buffett won approval to buy up to 50% of the company, which is a massively positive catalyst, obviously, as Uncle Warren is going to be pouring in millions of dollars into this over the coming months, and who knows how long it's going to take to accumulate that much. but there is going to be a big buyer backing this most likely. So taking a look at the chart, the stock is at a major inflection point with it sitting right at the 10-year long trendline resistance line. Now, if it's able to break above that trend line and those recent highs, it can make a much larger move here, which is something to watch for moving forward. Zooming in, Friday's pop on volume looks a lot like what happened in March, which resulted in a 40% plus move in a span of 5 days. Is that going to happen again? Most likely not, but there is potential for this stock to move big and move quick, as we've seen in the past. So I'm personally watching for a break above $74 to this result in a breakout, which can make a quick move towards $80 next if that does play out. Something that could be more likely though, in my opinion, is it to pull back here and to build out a handle in the cup and handle pattern before potentially breaking out towards the new 52-week highs. So that's another trade idea for the coming week if Oxy is able to break above that 74 level for a leg higher. Also, it's easy to set risk buying at a key pivot such as $74 per share. You buy, let's end up buying at $74.50. You set your stop loss right below at $73.80 in case it turns into a false breakout. So in that case, you'd be risking 1% of the capital that you put in this stock, and you can make whatever your target's being. You always want to go for that asymmetric risk reward. So targeting $80 as the first target level, and you're risking 1%. It sounds like a pretty good risk reward trade for me if that breakout does play out and is executable to enter on. So that's some scenarios that I'm watching for the broad market to play out next, along with some sector trade ideas and individual stock trade ideas this coming week. Hope you all enjoyed and hope I provided some value to you. If so, make sure to hit that like button and subscribe button. Helps me out a lot and I would greatly appreciate that. For anybody interested in joining the private Discord chat, getting my personal trade alerts, that is the first link down in the description. Thanks so much for watching, guys. If you would like and subscribe, it means a lot to me. I will catch you all next time, and peace out.